Good morning, everyone. Hope you guys having a good morning and a very warm welcome back to our channel. Today is Friday, 3rd of July 2026. So yeah, it's already 9:23, and that's there is already you guys know that Indian stock market is officially open for trading now. So before we jump into today's live numbers, just this, let me say if you're new here, hit the subscribe button because you get a quick notification update about the markets from the Stock Research 360. Because every day we'll be bringing you new updates, uh, complete updates, sensible breakdown of what's exactly moving in the market, Indian indices, global cues, crude oil, gold, FI, data. Let me just come back. Just give us 3 minutes. We'll come back. So as I was mentioning, we'll be giving you Indian indices, global cues, and crude oil, also gold, FIDI data, and big stock specific news. Just the facts and analysis we'll be giving every day, so that you can make sense of your portfolio. Yeah, guys, we'll just jump to the news. I'm sharing the screen also. You can just look at the chart also, analyze it. So today's session is actually a genuinely an interesting one. We had a strong bounce back yesterday on Dalal Street, as we know, and we have got a mixed signal coming in from Asia's overnight. Also, US futures are like choppy, and crude oil has been cooled off nicely. So there is actually really important geopolitical angle, some positive diplomatic movement between US and Iran that is quietly changing the mood in commodity world markets. So there is a lot to cover today. Let's start right where every trader wants to start, and what happened to Nifty, Sensex yesterday, and where it has opened today. So we'll talk about the yesterday's recap. So on July 2nd, yesterday, that is actually session actually that set the tone for today. So the Nifty 50 closed at 24,175.70, which was a gain of about 0.7471%, and that's for the day. And the Sensex ended even stronger, which is 0.75%, closing at 77,502.12%. On 2 points, and that's a really solid green candle, especially when you consider where we came from, because you should remember that just the day before that, on July 1st, the Nifty has already bounced back above 24,000 mark, closing at 24,005.85, up to 0.59%. So while the Sensex railed 444, I mean 443.97 points to end at 76,922.64. So essentially, what we saw was like 2 days back to back positive, like on a Dalal stick, snapping what has been two session like losing stake earlier in the week. That's a meaningful shift in the momentum. Traders will be watching very closely today to see if we can make it 3 green days in a continuous row. So the interesting part here is Bank Nifty didn't really participate much in yesterday's rally. It closed almost flat 58,031.65. So basically unchanged. That's the gain we saw were not coming from banking heavyweights. So they were coming from elsewhere. We'll get into exactly which sectors saw this rally. So the one more number which is actually worth flagging here is India VIX, which is our volatility or fear index, as we know, and which is actually dropped sharply by 7% to settle around 12.29. Now, for those who you are like new to markets, who are just entering and learning, falling VIX generally means the traders are becoming more comfortable, less nervous, and expecting smaller swings ahead. So, VIX below 13 is considered a fairly calm reading. So, it's actually a reassuring signal for bulls going into the today's session. And for yesterday, broad-based buying, especially outside of banking, cooling volatility, and a market that is clearly trying to build a floor after a rough patch. So yeah, now let's talk about why the market went up yesterday, because this is where it gets interesting. If we know the reason why it went up. So according to the market commentary from the yesterday session, the rally was broad-based, and with buying seen across banking and also FMCG stocks. And this is the standout point where IT stocks actually outperformed, which is like July 2nd, which was yesterday. So that's a bit of a turnaround, because just a day earlier on June 1st, the IT sector was under serious pressure from the last one week also. The Nifty IT index has fallen over 2% a day. It's a single straight day of losses. So we saw HCL Technologies drop more than 3.5%, and TCS slide about 2.4%, And also Infosys down up around 1.5%. That's a big deal because IT stocks carry heavy weights in both Nifty and Sensex. So when these gains fall together, it really does put a lid on the whole index. So, as we know, the reason behind the IT weakness was actually coming from the overseas. That was a sell-off in the global technology and semiconductor shares on Wall Street that spilled over into our over IT pack. So, Indian IT stocks were essentially taking a hit due to global tech sentiment, not because of anything specifically wrong with the Indian software companies or its fundamentals. So then we saw it bounce back and actually lead gains on the July 2nd. So which tells you this was a more of a short term sentiment driven dip rather than a structural problem. So if you are a long-term investor in this quality IT names, dips like this are usually the kind of that bought into. So not panic out of. So obviously this is not a investing advice or something. Always do your own research or talk to your advisor. But it's actually worth understanding the whole pattern with this. So here's a story that doesn't always get enough attention for financial uh, channels, but it's honestly one of the most important tailwinds for the Indian market right now. That is crude oil and Middle East situation. So there has been meaningful diplomatic progress coming out of Qatar, as we know, and Iran indirect negotiations between United States and Iran are reportedly showing what's been described as a positive progress. So now, why does it matter to our portfolio? So because one of the biggest fears hanging over global markets has been the risk of blocked or disruptions along the Strait of Hormuz. So that's actually narrow, incredibly important shipping corridor through the huge chunk of the world, like world the oil supply, passes every single day. It's for with this particular diplomatic thought, those blockage fears have easily quite a build. So that shows up directly into crude oil prices. So now just let's bring numbers to our like own tracking on MCX. Crude oil was trading at around 6,477 per barrel, down 48 rupees or about 0.74%. So continuing its cooling trend, for those who are tracking technical levels, resistance on the upside is around 6,650 and then 6,750. Like while support on the downside. So which is like sitting around 6,515 and also 6,440. Let me just so yeah, I was talking about the resistance. I was talking about the resistance, which is 6,650 and 6,750. Also the support, which is around 6,515 and 6,440. If a crude breaks below that 6,440, that support zone, we could see further downside, which is, by the way, would actually be a good news for India since we are massive net importer too in this crude oil. So yeah, here's why this matters so much for Indian investors. So India imports over 80% of its crude oil needs, and when oil prices falls, it directly helps a trader like defect it. So it eases pressure on the rupee, and it reduces input costs for a whole range of industries. So from paints, tires, aviation, logistics, and it even has a knock-off effect on this inflation expectation. So which is turn affects how the RBI thinks about the interest rates. So the dramatic cooling of a crude oil prices, as some market commentary put in, it genuinely one of the strongest tailwinds working on favor of Indian this equities right now. So this you should combine that with easing Iran attentions, and you have got a macro backdrop that is quietly supportive for the Lal Street. So let's just shift what happened overnight on the Wall Street, because the this sets of tone for our gift nifty and our opening today, right? So US markets closed on a film note that Dow Jones ended around 52,335, up marginally by about 0.02%. So basically it's flat but kind of positive. That S&P 500 like however slipped a touch down around 0.15%, closed near 7,506, and the Nasdaq was the relative underperformer overnight, down by 0.59%, and sitting around 26,069. So now, if you are tracking our US features update from Thursday, so just remember we flag this exact split personality like market, which is S&P 500 futures were down marginally by 4 points or 0.05%, sitting near 7,539.50. But Nasdaq 100 futures were actually up over 1117 points, which is 0.39%, nearly 29,981. So, and down futures were about 39 points, which is 0.07%, nearly 52,703. So it clearly tells us that US market are not moving as one unified block right now. So that's a real divergence happening under the surface, right? So big tech and semiconductor names have been under pressure and dragging the Nasdaq down. So, which more traditional, cyclical, and value-oriented stocks in the Dow have been holding up better, or even they are gaining. So, these kind of rotation, like money moving out of highly flying tech and into other sectors, is something serious investors should watch closely before, because it often signals a shift in market leadership. So the especially in Indian IT sector, this matters a lot because Indian IT services companies are deeply linked to how US technology spending and sentiment moves also. So wobbly Nasdaq generally means some near-term cautions for our IT packs, even if the domestic story remains intact. Also, I should mention this: European markets closed firm overnight. The effect FTSE 100 in London was up about 0.43%, nearly 10,523. So Germany's DX gained close to 1%, near 25,283. So France's CAC is 40, rose about 0.88%, around 8,410. And the broader stocks up 50 was up to 0.6%, which is near 6,320. So Europe had a genuinely strong session, and Fin global backup is one of the reason why analytics are expecting some underlying support for our market today, particularly in cyclical and related to banking stocks. So we'll talk about the dramatic thing in the market. Honestly, this is the part of today's story that deserves the most attention about the dramatic part of the market. So while India closed higher yesterday up to 0.71%, and the rest of the Asia has genuinely rough session. China Shanghai Composite dropped to 2.202%, closing near 4028.90, dragged down by weak domestic economy, whole economic data coming out of the mainland. So Japan's Nikkei 225 fell over 2.47%, closing around 68,733, which is actually hurt by combination of this N strength and also those global tech related cues. We already talked about this earlier, but the real shocker here is I want you to really pay attention to this number because in South Korea's Kospi index, I'm mentioning this the same news from the past 1 week. It plunged nearly 7.89% in the single session. Korea's Kospi index, yeah, closing around 7,648. This is an enormous move for a major index in single day. The reported reason is a sharp tech sell-off combined with the export concerns, which I'm mentioning from past 1 week. And you should remember, Korea's stock market is incredibly highly heavy on semiconductor and electronic gains. So when there is a global tech wobble, Korea often takes the biggest hit of any other Asian markets. So now, why should you, as an Indian investor, care about what's happening in Korea and China? So, why you guys think? So the only reason is because a globally connected market sentiment it travels like when we see this kind of sharp, almost panic level selling in a major in Asian index like a Kospi, which is like Korean, it can create a ripple effect. Sometimes it triggers a broader risk off mode across like whole emerging markets, and it sometimes like we saw yesterday, India actually managed to decouple and hold its own strength because of domestic specific positive like the crude oil as we discussed. So the whole picture of the for that whole today is genuinely kind of mixed. Wall Street closed roughly flat to the fame, and Europe closed strong, and Asia overnight was like quietly kind of shaky. With the Korea is like seeing near 8% crash. This kind of divergence is exactly why GIFT Nifty and our opening bell today, because so important to watch. Like it's so important day to watch all of this together. So we'll talk about the gift nifty and what we are expecting from the gift nifty today. This is a moment a lot of you guys been waiting for. What exactly gift nifty is telling today, and where exactly it opened, and where we are trading right now in gift nifty. So, as per the latest available indicator ahead of today's session, GIFT Nifty was trading around 24,319, up roughly 0.25%, suggesting a mildly positive to gap up opening for our market. So, continuing the momentum from yesterday's close. So there is a three things analysts are actually like fighting for today's session. One is a range bound opening is likely with the gift nifty only slightly positive. We are not expecting a fireworks at the open, uh, as we know. So markets may trade within a fairly narrow. So initially, unless some fresh trigger comes in during the midday. And the second one is global sentiment support because one of those firm closed in the US and specifically in Europe, there could be some underlying strength, particularly benefiting cyclical stocks and banking names, which you should remember that where the lagards is today. So keep your eye on the bank nifty. It it may try to catch up. And the third one is this is the very important part, which is volatility watch. FII and or like foreign institutional investors have continued their selling streak. So on July 2nd alone, FII were like net sellers of the around 311 crore rupees the day before, the June 1st. So they sold even more, about 1,140 crore rupees. So if you just go back further on June 13th, if I like pulled on the massive 2,556 crore rupees. So actually, there is a good news also, honestly. So this is the real hero of the Indian market story right now, which is domestic institutional investors (DII) that have been buying aggressively and absorbing all the FIs selling. On June 2nd yesterday. DII got strongly 1,784 crore rupees worth of shares. So on the July 1st, they bought even more, like nearly 3,159 crore rupees. And on June 13th, if I like we're dumping over 2,500 and 500 crores. So DI came in and bought a massive 6,842 crores. So more than offsetting the foreign selling whole entirely. So this is a really crucial trend for you to understand as a retail investor. Every single month, money flowing in through SIPs, this mutual fund, insurance companies, and also these pension funds is creating a structural floor under the whole market. So even there is a foreign investor get nervous and pull money out, which they do like regularly, reacting to the global cues, US Treasury, and dollar strength. Our own domestic money is stepping and cushioning the fall. This is exactly why, despite the whole global volatility, these like places like Korea, China, India has been relatively resilient now. So you should keep watching the FIDI tug of war throughout the whole day. Today's session, it will likely determine whether we hold or gain or give some back intraday. So yeah, we'll talk about the key levels which you should keep your eye on and watch there. So let's just talk about the some technical levels. Purely for educational tracking purposes. Remember, this is not a investing advice or something. Always do your own research. Just we are giving educational purposes information. So on the Nifty, since we closed at 24,175 yesterday, and the gift Nifty is indicating an open near 23,300, 24,300 to 24,320. So the psychological level to watch on the upside would be near 24,300 to 24,350 zone. If we can close decisively above that today, it opens the door for rest of the higher levels next week, since there is no market tomorrow and the day after tomorrow. So on the downside, 24,000 remains a strong psychological support. That's a level we reclaimed just 2 sessions ago. So bulls will be not want to lose that again. So we'll talk about the Sensex and we are coming in around the 77,500 mark. Watch for resistance closer to 77,800 to 78,000. Support around 77,000, which lines up with that same psychological zone we bounced back from earlier this week. And for Bank Nifty, since we were flat yesterday around 58,031, today's session becomes actually important. If banking stocks catch up with the broader market and global cyclical strength, we could see Bank Nifty's attempt to push towards 58,300 to 58,500 at that zone. A failure to do that, though, we would suggest the banking continues to lag the whole rally. And we'll talk about the crude oil. As I mentioned earlier, resistance sits at 6,650 and then 6,750, while support is near 6,506 and 6,440. A break below that low support could accelerate the cooling trend, which again would be net positive for Indian market overall, like given our important dependence. So now let's talk about one of the standout company specific story making headlines, that is Tata Technologies. So Tata Technologies announced an expansion of its strategic partnership with Tenneco LLC. Like this is a genuinely large deal valued at more than $100 million over the next 5 years. On the back of this news, Tata Technologies shares rallied near 4% in the intraday trading. So, Tenneco is described as a global automotive leader, and this is the collaboration is specifically designed to enhance engineering capabilities and accelerate the digital transformation. So, it helps Tenneco respond more effectively to global market demands. In simple words, Tata Technologies is going to be doing a lot of high value engineering and also the digital work for one of the world's major auto component companies. And also the entire program will be led out of the Tata Technologies, like a global engineering center in Pune. So this is India's engineering talent being leveraged to support global automotive gains with worldwide operations. That's actually a strong statement about how Indian engineering services companies are increasing and also becoming indispensable partners for whole global manufacturing and automotive players. It's actually not just the back office support or something. So I'll be telling what you guys need to watch for rest of the day for today. So let me just give you a quick checklist of this to keep in your eyes for the rest of the today's whole trading session. The first one is track whether Bank Nifty finally participates in the rally, given the firm global cues from Europe overnight. A move in banking could be a difference between a flat day or a strongly positive day. So also second thing is you should keep watching IT stocks after the sharp fall on Wednesday and the strong bounce on Thursday. So today's Nasdaq weakness overnight could be some renewed caution in HCL and TCS, Infosys. So watch how these heavyweights behave in the first half. Also, the third one is keep an eye on the FI and DI data as I mentioned, and it gets updated. So, if a DI continues their aggressive buying praise, so we saw the over last week what happened. That's the strong signal of underlying market confidence, regardless what foreign investors are like doing. And also the fourth one is track crude oil to the whole day. Any further diplomatic headlines from the Iran, US talks, and the Qatar could move all oil prices like meaningfully, and that has been direct. The implications for our OMC, paint companies and tire markets and aviation stocks, which I mentioned. And the last one is with the dramatic near 8% crash in Korea's Kospi, keep half an eye on how other Asian markets behave when they open today. So if any contamination risk like build up in the region, it's better to know early rather than just get off guard. So a market that's coming in with a cautious optimism, uh, backed by strong domestic buying, also the cooling oil prices, easing geopolitical tension, but still watching nervously over the shoulder at a volatile. So tech-driven sell-off across part of Asia and divided Wall Street. So you should always remember that everything we are discussing in the video for educational and information purpose only. So this is not an investment advice. So or a recommendation or something to buy or sell any security purpose. So markets are volatile, prices fluctuate in real time, and you should always do your own research or consult a registered financial advisor before making any investment decisions. So let me come back with the commodity updates and live updates. So yeah, we'll be come back. We'll be back with that update. Just be in the session. We'll be back in 5 minutes. Anala. So yeah, guys, as I mentioned, we'll be talking about the community updates because yeah, honestly, this might be the single biggest story of the day because bigger event that what's happened on the equity side. As we expected, gold has exploded higher overnight. So international spot gold jumped nearly 1.5%, reclaiming that 4,100 mark as pushing its high of $4,185 as and once. So that's a sharp rebound after gold has actually touched an 8-month low as a few sessions ago, as I mentioned. So on the trading economics data feed, gold was last seen around $4,133 an ounce, up about 0.36% on the day. But intraday, it went well beyond that. Though, and silver did even better. Silver rallied over 2%, climbing over $61, and at one point touching above $62 an ounce. That's the strongest recovery after silver itself had slumped to 7-month low. So the natural question which comes in our mind right now is why this sudden and sharp rallies like precious metals, and the answer, ladies and gentlemen, is one single data point, which is the U.S. job report, which actually affecting and impacting all other segments also. So, which I'm mentioning U.S. job report from the past 3 days, how it's impacting the other segments, also the commodity. The overnight US non-farm payrolls like report came out, and it was actually big miss. So the American economy added just 57,000 jobs in a single June month. This is the weakest number in the 4 months, and it's way below what economics were like expecting, which was around 1,10,000. So basically, the US economy created roughly half the number of jobs that will Wall Street was forecasting. So if we go a bit deep and if we dig a little bit and if we go deeper, just for the more details, the unemployment rate actually ticked down by 4.2% now. So, but that wasn't because more people found jobs, and it was because few people were even looking for work. The labor force like participation rate dropped 61.5%, meaning a chunk of American simply like stepped out of the job market altogether. That's actually a sign of underlying weakness. That's the for a low employment rate. So if we take a sector wise, professional and business services added 36,000 jobs, and social assistance added 25,000, and healthcare also added 22,000. Those were the bright spots, but leisure and hospitality actually lost 61,000 jobs. That's despite what should have been tourism boost from the ongoing World Cup. So that's actually a genuinely weak signal for the American consumer economy. So here's why all this matters so much for marketers, also Indian marketers. So when US job data disappoints like this, Indian like traders immediately start recalculating what the Federal Reserve is likely to do next, like next with the interest rates. And before these job reports came out, Fed funds like a future were pricing in roughly 67%, probably of a rate move in September. After this week jobs like whole job sprint, the probability dropped sharply down to somewhere between 50 to 60%, depending on which data providers you guys are looking. So, top of the whole news, Federal Reserve Chair like Kevin Walsh made comments earlier this week tonight, like that inflation expectations have been moderating over the past month. He was careful to reaffirm the central bank's committee to price stability, but the tone was seen as somewhat less aggressive than the market had been bracing, yeah, the bracing for. So you should put these two together, softer job data and plus Fed share surrounding a little less hawkish, and you get exactly the kind of environment that bullish of gold and silver. And precious metals tend to rally hardest when there uncertainty about economic outlook. So, an important educational point for viewers is gold at an 8 months low just days ago. As we discussed, it was a 8 month low and now bouncing back over 1.5% in a single session. So, it tells you just how sensitive commodity markets are in a single day releases. This is exactly why, if you trade commodities, you cannot just afford to ignore the whole economic calendar. So a single jobs report, a single Fed comment can move gold and silver by several percentage within hours. So yeah, let's just bring back to our home and talk about what MCX for means to India, our domestic commodity exchange here in India. So as of the most recent available reading, MCX gold was trading at the range of roughly 1,41,000 to 1,42,000 for 10 grams. And given the sharp overnight rally, yeah, in international gold prices, you should expect a meaningful higher. Let me just come with the update. We have some update. So we have just a quick update about the PFC stock. Uh, the action is buy and the entry price is near 429 to 429.5. Target is 0.5 to 2%, as we already like give. This is the calls we give to our clients. So you guys watch and close. Yeah, you can just keep your eye closely on this particular stocks. So this is a purely intraday cash segment only. Just remember this thing in your mind. Stop loss is near 426.85 at 426.85 stop loss. So you can just keep your eye on this and watch this closely. This is a call we are giving. So yeah, this entry was given at exactly when the stock was at 428.9. We have given this call to our clients when it was 428.9. So I was talking trade gold is nearly trading roughly near 1 lakh 41,000 to 1 lakh 42,000 for 10 grams, and it has given a sharp overnight rally in international gold prices. But you should expect some meaningfully higher opening today on M6 gold, which is like over 1%. For silver, given the international prices nearly jumped over 2% and briefly touches about $62 on once. So M6 silver is contract should actually trade near with a strong gap up. So for now, for people who are actually tracking physical gold rates for jewelry buyers as well. So when the international gold and silver prices moves like this, it takes maybe a session or two to fully filter down the local jewelry rates in cities like Bangalore, Mumbai, Delhi, Chennai. So if you are planning to buy gold or silver physically, keep your eye on your local city rates like over the next couple of days, because this overnight rally is likely to push retail gold and silver prices higher across India. So for traders, key levels to watch on M6 gold today are this is the fast moving and news driven rally, but would be to track whether gold can sustain about above $4,100 to $4,150 international zones, and a sustained move above the door toward the physically psychologically important is $4,200 level. So if you take the currency part, because the Indian rupee has its own increasing tug of war happening right now. Over the last couple of sessions, the rupee has been hovering in the range of 94.5 to 94.9 against the US dollars. So on July 2nd, yesterday, the rupee was seen around 94.7 level, extending its recent losses. So the reason is rising US Treasury yields. It has been strengthening the dollar broadly, and the dollar strength has been weighting most whole Asian currencies, not just only Indian rupee. It has also like reported that Reserve Bank of India stepping in and reporting selling dollars near 94.75 level earlier this week, and essentially intervening to prevent the rupee from weakening. Like this is the reason they're selling so too fast. But once the intervention effect like faded, the currency resumed its gradual side. So the rupee right now is essentially caught between two opposing forces: a strong dollar and high US yields pulling it down, versus cheap oil and easing geopolitical risk holding it from up. So for now, dollar strength side has upper hand. But if crude continues to cool off the way it has been, if today's weak US job data continues to soften dollar business, so we could see a rupee stabilization or even clawback to the recent losses we had. So let me just connect the dots for you, because a lot of people ask most people will be investing in the stocks, and should I just care about the gold, oil, or rupee? Here's why I'll be telling you the reason, because you should keep your eye on the commodities also. And if crude oil keeps falling, that's a direct tie-in for paint companies like Asian Paints and better paints, tire markets, MRF, Seed, Apollo tires for aviation stocks like Indigo and OMCs like Indian Oil and BPCL on the marketing side. So lower crude oil keep helps keep inflation check if it gives the RBI more room to think about rate cuts. So and lower rates are genuinely positive for rate sensitive sectors like banking, real estates, and also autos. If gold keep rallying, that's actually a positive signal for gold financing companies like Muthoot Finance, Manapuram Finance, since higher gold prices like increase the value of collateral they hold. It's actually worth watching jewelry retail stocks like Titan through a very sharp and fast rallying gold can sometimes jump near-term jewelry demand as buyers wait for prices to stabilize. And if the rupee weakens for further from here, that generally a positive for export-oriented sectors like IT. Like IT services companies actually benefit from weaker rupee since a large chunk of their revenues in dollars and also commercial exporters beneficial too. But weak rupee is negative for companies with heavy dollar denominated debts for import heavy businesses. So if you see commodities and currencies are not some separate or unrelated part of the market, they are deeply interconnected with your equity portfolio and understanding this cross current is what separates surface level investors from someone who just really understand what's driving whole stock prices. So as I mentioned, Nifty and Sensex closing higher for a second straight. So that's the news which were impacting the today's news, and in the segmental wise, I have mentioned the commodities and currencies also. So I'll be updating the new newses and updated newses in the session. Also, now after 10 minutes, I will be back with the option chain analysis. So we'll be back soon. Just keep watching, and we'll be updating the live updates also about the market. And if there is any good movement, we'll be telling you guys to keep your eye on. And we'll be mentioning the trades and the calls we are giving to our clients also. Also, I have mentioned the link in the description and the chat link, chat box. You just in that meantime of 15 minutes before we come back, just go through the links we have mentioned in the chat box and the description. It's our website and the contact link. You can just ping us and contact us. We'll be giving you a demo session about the tool we are using and the indicators we are seeing here. We'll back with the updates, guys. Just be in the session.
So within 10 minutes, we'll be back with index analysis and option chain analysis. So until then, let me know if you have any comments regarding your favorite stock. Put it in your comments. We'll just analyze it for you. We'll also be discussing about the calls that we gave yesterday and the performance of it. So yeah, we'll be back with index analysis and option chain analysis. So we'll be back with index analysis and option chain analysis.
Hello. I think there is a kind of technical glitches. ಕೇಳಿಸ್ತಿದ್ಯಾ? ಕೇಳಿಸ್ತಿದ್ಯಾ? ಮೈಕಲ್ಲಿ ಯಾಕೋ ಕೇಳಿಸ್ತಿಲ್ಲ?
So we'll start with Nifty analysis and its option chain analysis. So if we look at the Nifty technical chart, so currently we saw a huge gap up today. So it has, if we switch it to 15 minutes chart, Yeah, we can see a strong trend line break. So wait for still the market is in sideways. So wait for a proper structure break. Then we can get to know the exact direction. So if you look at the open interest, the strike prices. So we are looking at a crucial tool for any option traders. So the Nifty open interest chart. If you have ever wondered where the big institutional money is sitting, or where the market might find the next support or resistance, this is the exact what you need to be watching. So think of this as the pulse of market sentiment. It shows us the total number of outstanding derivative contracts that hasn't been settled yet. So, if what does the bar tells us is you see a green and red bars across various strike price. So the green bars represent put to white. So these are the position held by those betting the market and will hold or rise. So the red bars are call OI, representing positions betting on the market staying flat or declining. So when you see a very tall bar at a specific strike price, that's your OI wall. A green bar acts as a strong support, while a red bar acts as a significant resistance. Yeah. So you see green and red bars across various strike price. The green bars represent put OI. These are positions held by those betting the markets that will hold the rise. And the red bars are call OI, representing the positions are betting on the market staying flat or declining. So these acts as support and resistance. So when you see a very tall bar at a specific strike price, that's your OI wall. A high green bar acts as a strong support, while a high red bar acts as a significant resistance. So how do we use this live would be rising open interest alongside a price move usually confirm a strong trend. So it means the new money is actively entering the market. So look at the ATM label on this particular chart. So that this marks at the money strike price, whereas the current spot price of Nifty is hovering. So this is epicenter of the current tug of war between bulls and bear. So a quick reminder for the chart: don't confuse this volume. Volume counts every trade executed today, but open interest only counts the contracts that are still open and active. So check the PCR. So keep an eye on PCR put call ratio or ratio above 0.862 often signals a bearish sentiment. So when it's below 0.8, it suggests a bearish sentiment. So just let me know in the comments that if you got an idea how to read this. So I'll also explaining the entry strategies using this. ಸರ್ರಿಗಿನ ಕಳಿಸ್ಬೇಕಂತ ಸರ್ರಿಗಿನ ಕಳಿಸ್ಬೇಕಂತ ಹೇಳಿ.
ಏನಾದರೂ ಕಳ್ಸೋದಕ್ಕೆ ನಂಗೆ ಹೇಳಿದ್ರು ಅಂದರೆ ಕರಿ ಆಯ್ತಾ, ವಾಟ್ಸಪ್ ನೋಟಿಫಿಕೇಶನ್ ಬರಲ್ಲ.
So the entry strategies using this would be a range bound strangle. So if you notice that high call OI and highest put OI are far apart, the market is likely trapped in a range. So you can sell options at these high OI levels, assuming that the market will struggle to break through these walls before expiry. So why this works is these levels act as support and resistance because large players have significant capital committed to keeping the price within this range. So identifying breakout and breakdown points would be if the price approaches a high OI call resistance level and OI starts falling while the price rises. This may signal short covering where sellers are forced to exit their positions, potentially fueling a breakout. So conversely, if the price approaches a high put OI support level and OI starts falling while the price drops, so it suggests that the long position holders are panicking and exiting while can accelerate a downside move. So trend confirmation, you can use trend confirmation using long build-up and short build-up. So if the Nifty price is rising and the total OI is also rising, it indicates fresh aggressive buying. So this is bullish signal, suggesting the trend is likely to continue. So always remember few things. Validate with volume. So volume shows the open position. High trading volume is required to confirm that the breakout is actually happening. And watch the ATM at the money. So it is where the most immediate conflict happens. So if the price drifts away from the current ATM towards a high OI strike, monitor the strike closely for a potential bounce or a stall. So always emphasize the OI data is a tool for identifying probability, not certainty. So pair these levels with their with your own stop loss strategies. So please remember that all content provided on this stream is for educational and information purpose only, and does not constitute financial investment or trading advice. So the stock market involves significant risk, and you can lose more than your initial investments. So the data reflects historical and current market open interest, which is not a guarantee of future performance. Always conduct your own independent research and consult with a qualified financial advisor. So before making any investment decisions, not a financial advisor, and any trade you execute are at your own risk. So by continuing to watch the stream, you acknowledge that I'm not responsible for your financial gain or losses. So we'll now talk about Sensex and its options analysis. So if we look at the chart here, we see a PCR here of 1.056. So PCR is a mood thermometer for the market. So below zero point 0.7, it often signals extreme optimistic, which can sometimes precede a stall or reversal. So near 1 generally suggests a neutral or balanced sentiment, and above 1.3 often indicates a high fear or heavy edging, which contrary traders sometimes view as a potential bounce zone. So the OI is a probabilistic tool, not a crystal ball. It is most effective when combined with price action and volume rather than being used in isolation. So open interest represents the number of outstanding derivative contracts that hasn't not that have not yet been settled, exercised, or expired. So it is a measure of where institutional money is currently positioned. So green bars represent put to buy. These are positions where traders are betting the market will hold or rise. So a high put to buy at a specific strike is often called as a put wall. So we can see here 78,000 is considered as a strong put wall. So as these sellers want the price to stay above this level, so red bars represent call buy. These are positions where traders are betting the market that will stay flat or decline. So high call buy is also known as call wall or resistance level. So as these sellers want the price to stay below this level, so how to interpret chart using this tool is look for there are four types of interpretation: long build up, short covering, and long unwinding. So if price increases while OI increases, for example, if the price is moving upwards, if the price is moving upwards and the price also increases here, the OI also increases here, this suggests new money is entering the market and buyers are confident. So short buildup is a bearish sign. So price decreases while OI increases. So when price is decreasing here, when it is falling, and when we see the red bars showing higher interest, open interest. So this indicates that bears are actively building new positions, expecting a further drop. So short covering is price increase while OI decrease. So when price is increasing and the green put OI bars are decreasing, then it shows that the existing sellers are forced to close their position, which can push the price higher. And long unwinding is bearish. This happens when price decreases with while OI decreases. So this means long position holders are exiting their trades. So volume counts every trade executed during the session, whereas OI counts only the contracts that remain open. So high volume day doesn't always mean OI will be high. So as seen as your screen, the PCR is a sentiment indicator. A ratio above 1.2 often suggests a bullish sentiment, and a ratio below zero point 0.8 suggests bearish sentiment, where call writers are dominant. Values between zero point 0.8 to 1.2 indicate a balanced market with no strong directional bias. So strategies using trading the OI wall would be option sellers often build large position at a specific strike. So intending to defend them, you can use these levels to set entry and exit points. So look for strikes with the highest call Y. These levels indicate strong selling pressure where the market is likely to stall or reverse downward. So look for if you're looking at support, look for the strikes with highest put Y. So we can see 78,000, 77,900, 77,500 is another major support. 77,000 is another major support. So 77,700 and 600 is also considered as a major support as put OI, call OIs are starting decreasing. So identify supports and resistance using this. So when the market approaches a high call OI strike, consider it a potential zone to book profits or long positions or look for a bearish reversal sign. So when it nears a high put OI strike, consider it a zone for potential buying opportunities or profit booking on short positions. So don't just look for static levels. Just watch how the bars change as the price moves. So once it reaches the resistance or support level, let's say it reaches a strong resistance level at 78,500. Look at the call OI bar. Does it increase or does it decrease? And also look at the put OI bar. So if it is decreasing, then we can see the long positions are starting to unwind. Traders are booking profit and exiting the long positions. So if this call OI starts to increase, then there is a strong sign of bearish reversal. So if it's approaching the resistance, look for call OI starts decreasing. Then there is a potential short covering breakout. Watch for a move above the strike. If it is approaching supports, look for put OI starts decreasing. So potential panic selling. Watch for the breakdown below the strike. So approaching resistance, call over increases significantly, high probability of rejection, look for bearish setups. So don't trade in isolation, always confirm these levels with the price actions and overall market trend. The absolute number of contracts shows the strength of the wall, but change shows the momentum of the traders. The price decisively break through the high OI wall, it often triggers a short squeeze or a long liquidation. Always have a stop loss just beyond this level. So please remember that all content provided on this stream is for educational and information purpose only and does not constitute financial investments or trading advice. So the stock market involves significant risk and you can lose more than your initial investment. So always conduct your own independent research and consult with the qualified financial advisor before making any investment decision. So by continuing to watch the stream, you acknowledge that I'm not responsible for your financial gains or losses. So please keep it in mind. So we'll start analyzing Bank Nifty within 10 minutes. So until then, let me know if you have any doubts related to this particular open interest. So before moving to Bank Nifty, we'll just look at the calls that we gave yesterday and the performance of it. So, so these were the calls that we gave yesterday. So we gave a call in these were stock F&O trading calls. So we gave the first call was on persistent stock. So the time which we gave was 9:59, and the strike price was to buy 4,500 call option. So the entry price was 208 to 210, and the target that we achieved was 248. And the second call was at 10:29 a.m. Where we gave a call on ABB 7,000 put option to buy. So the entry price was at 88 to 90, and the target we achieved was 111. So yesterday we combined 63 points. Total points gained was 63, and the combined average return of both the trades was 21.5%. So if I'll just show you the chart of yesterday. So we'll look at a persistent 4,500 call option at 9:59 a.m. yesterday. So yesterday at 9:49 we had given an entry at the entry price was at 208 to 210 at 9:49. So you can see exactly the price was around 208 to 210, right? So this was the entry price, and from here we achieved the high of 254. So our target was 248, and we reached the price reached a high of 258. So we achieved 29% in the single stock option. And the second trade was ABB. So ABB was 7,000 put option we had informed to buy. So the time was, so we had given the call by 10:29 a.m. The entry price was at 88 to 90. So yesterday 10:29 a.m. Sorry, it was not a call option, it was put option. Yeah. So the entry price was around 88 to 90. So these were the two entries that we gave yesterday. And Nifty, I'll just, so these were the Nifty options trading calls. So at 9:17 we gave a call option Nifty 23,800 to buy. So the entry price was at 350 to 355 and target we achieved was 436. And the second entry was at 9:20 where we gave a call option Nifty 23,850 call option to buy. So the entry price was around 310 to 315 and the target that we achieved was 391. So we achieved 162 total points combined and the combined average return of two trades was around 24%. So this was yesterday's trading call. So I'll just show you one of this Nifty 23,800 call option which was on 9:17 a.m. yesterday. So on 9:17 we had given a call to buy yesterday. So the entry was around 350 to 355 and the target we achieved was 436. So we had achieved 23.65% in a single call, and this was Nifty options. So these are the calls that we gave to our clients yesterday. So we'll now move on to Bank Nifty and its option chain analysis. So if you look at Bank Nifty, the Bank Nifty spot price is at 57,994. So India VIX is at 11.88, and the put call ratio is two 0.282, so which is significantly lower than the PCR of 0.8653, indicating a very different sentiment for the current expiry compared to the overall data. So you can clearly see a massive red bar at the 58,000 strike price. So which indicates significant resistance as the market is hovering right around this level. So we have just a minute. So just few minutes before we had given a call on Power Finance Corporation Limited that we had given an entry at 429 and gave a target of 0.5% to 2%. So, but unfortunately, it has triggered SL. So that's that update we wanted to give you. So basically, we have 80 to 85% of accuracy, and we have been providing these calls to clients for more than for more than 1 year. So we have achieved more than 80 to 85% accuracy. No one can guarantee you 100% accuracy, but the risk reward is very good. We maintain 1:2 or 1:3. So a single loss wouldn't eat up your profits. So the calls that we are providing for the clients in Telegram groups and WhatsApp group, we have been doing that for many years. But in YouTube, we have just started and we have been giving calls for 2 weeks. So you can check our live YouTube channel. So we have given many calls and we have achieved the targets in live itself. So as I said, we have more than 80 to 85% accuracy. So having a positive risk reward ratio with 80% accuracy is very profitable. So a single loss wouldn't eat up your profits as well. So this trade triggered SL. So that's what we wanted to update you. So moving on to Bank Nifty. So moving on to Bank Nifty, we can see if you want to know where the smart money is sitting right now, we aren't guessing. We are looking at the actual contracts being built by the institutions. So we'll just look at the technicals of the Bank Nifty. You can see the current moments is in sideways. So the price has given a fake breakout at this resistance level and it is reaching the next resistance level. So we need to wait for a proper confirmation. We don't have a proper confirmation here. We need to wait. We need to wait and look for a candlestick pattern, and we'll just confirm with the OI open interest as well. So looking at this, we can see point your eyes at 58,000 strike. So our spot is at 57,948. So this is an absolute epicenter of today's price action. The massive red bar at 58,000, that is huge call OI wall. So institutions are aggressively selling calls here, effectively telling us they do not want the price to move significantly higher right now. So look at the PCR, it's at 0.282 for the specific expiry. So compare that to the overall PCR, which is at 0.8653. That massive gap tells me the market sentiment for this immediate expiry is extremely cautious, and the sellers dominating the call side. So, if you ask me, a live strategy to look at would be if I see the price holding above 58,000 and that giant red bar starts decreasing in height, that is a short covering signal. It means the bears are running for the exit, which could trigger a massive rally. So, if the price closes above 58,000, look at 15 minutes candle, wait for the price to close at 58,000 and look for this call bar. Unwinding, look at the open interest decrease. So that is a short covering signal. So the second scenario would be the rejection scenario. However, if the red bar at 58,000 grows even taller, if you see the strike bar getting increased, and while the price struggles to break above 58,030, if the resistance is holding firm, that is a signal to look for a potential reversal back down. So that what has happened here. It closed below 58,000 now. So yeah, we need to see how the price moves from here. If it retest here and give us a huge rejection wick and closes below this resistance level, then it would be a strong fall. So remember, this is not a financial advice. Trading options involves extreme risk. Everything you see is a data, not a crystal ball. So always use a stop loss and never risk more than you can afford to lose. I want all of you to look at your own charts. Does your technical analysis match the OI wall at 58,000? So let me know in the chat. So Bank Nifty is a game of patience. Watch the 58,000 strike. If it breaks with volume, the game changes. If it holds, we stay in this consolidation zone. So stay disciplined, and let's watch how this unfolds in next hour. So before we continue, please remember that all content provided on this stream is for educational and information purpose only and does not constitute financial investment or trading advice. So the stock market involves significant risk and you can lose more than your initial investment. So always conduct your own independent research and consult with a qualified financial advisor before making any investment decision. So any trades you execute are at your own risk. So by continuing to watch the stream, I acknowledge that I'm not responsible for your financial gains and losses. So that would be update on Nifty index, Sensex and Bank Nifty index, and its option chain analysis. So let me know if you have any doubt. Put it in the comments. So if you don't know how to align this with the index levels, you always need to take this as a confidence for your technical analysis, so that you'll be having higher accuracy. So the OI is a probabilistic tool, not a crystal ball. It is most effective when you combine it with price action and volume rather than being used in isolation. So do check our website in the chat box. Also, if you have any doubts regarding the tool or tool that we use, you can contact us. So since you don't have any questions, I'll just answer for few questions. So if you have any doubt that the massive red bar at 58,000 strike price, what does it signify? So it signifies the price represents high call open interest. Yeah. So it indicates a high call open interest, indicating a significant resistance wall where sellers are actively defending that level and betting the price that will not rise further. So if you ask me why is the current put call ratio of 2.0.270 important? So PCR of 0.280 is significantly lower than the overall CPR of 0.8622, which suggests that for the specific expiry, traders are much more aggressive in writing calls, reflecting a cautious or bearish sentiment in the near term. So if we ask what is the significance of ATM marker at 58,000 strike, so we can see the orange line that is called a ATM marker. So ATM marker identifies the 58,000 strike as the at the money level, meaning it is the current epicenter of the conflict between buyers and sellers, where the spot price is hovering. So if you have a question that if the price breaks above 58,000 and the red bar begins to shrink, what does this indicate? So this is just a short covering signal indicating that sellers are exiting their positions, which can act as a fuel to push the price even higher. So if you see, if we can see that the 58,000 strike is starting to regain, wait for the 15 minutes candle to close. So if we look this red bar start to shrink, then we can act as it will act as a fuel to push the price even higher. So if you don't know how to differentiate between support and resistance using the bar in the image, so green bars represent put open interest, they are support levels where traders expect the market to hold or rise. So while red bars represent call open interest, these are the resistance level where the traders expect the market to stay flat or decline. So I hope everything related to the open interest chart is clear. So let me know if you have any doubts related to this chart. So we'll be back within another 20 minutes explaining about stocks to look based on open interest and heat map. So until then, let me know if you have any doubts in the comments regarding the open interest. Let me know your view on all the index. Let me know your analysis.
Hi guys, as we mentioned, we are here with the open interest. Hello, yeah. So here we are here with the open interest, which stock has gained open interest, and according to the open interest, we'll be telling you the top five stocks of the day. So yeah, welcome back again. So as I told, we are talking about the open interest. So which is actually something different, and honestly, this is the uh, part the serious traders love the most, because we are going to talk about the open interest now, specifically with stocks are seeing the biggest jump in Y today, and you should get to know why it has jumped. So if you are a beginner and thinking what is why thing and sounds complicated, just don't worry. Just I'll be explaining you. I'm going to explain in the simple way possible. So I'm just talking to a friend or chat, and then there is no confusion. By end of this segment, you'll understand exactly what open interest means and why it's important, why five stocks are the hottest names in the today's derivative market. And the important question here is why. Yeah, so if there is an open interest jump, and you should get to know why it has jumped. You should get to know the news or reason behind it. So let me just start from the zero. Think of it like in the futures and options market. Every time someone buys a contract and somebody else has to sell it, so there is a that's one deal, right? So one trade. Open interest is simply the total number of these contracts that are like still open, meaning still active, not yet closed or squared off. So let me just give you a simple example. Okay, support today like 10 new buyers come in and buy 10 lots of like stocks futures, and 10 new sellers sell those 10 lots of them. So that's 10 new contracts created. So when open interest goes up by 10, but now tomorrow if some of those like same buyers decide to sell back to their positions and close it out, and the other side is also exist, that reduces open interest because the contract is now closed. So, raising open interest means new money is entering the market. It means fresh positions are being built up. Falling open interest means like people are closing out old positions, like exiting the trade. So why it matters is you as a trader or investor, price alone doesn't tell you the whole full story. But when you combine price movement with OI movement, you get a much clear picture of what really happening in the market. So let me just break down the four combinations. Yeah, all this for you, because this is honestly one of the most useful thing you will learn in this video. Every time when I tell the values of open interest in every video, I'll be telling you the brief about the open interest, because some viewers will be too new to this channel. They'll be just watching, so they don't have any idea, they won't be having any idea what exactly open interest is. Some newbies will be attending the video, and they don't have any idea what is open interest. So that's why I'll be just briefing about the open interest. And the number two is, if price is going up and Y is also going up, the that means like fresh buy is happening right now, like fresh buy is happening, so new long position are being created. This is called long build up, and it's generally a strong bullish signal. And also if price is going up but OI is going down, so that means people who had bet against the stocks, that short sellers are like running away and covering their positions, which actually push the price up. This is called like short covering. So also price is going down and OI is also like OI is going up. That means the fresh selling is happening. New bets are being placed, and the spot will stop. That particular stock will also like fall further. This is called a short build up. So and it's in a bearish signal. If prices is going down and OI is also going down, that means existing buyers are exiting their positions, giving up and getting out. This is called long unwinding. So before we jump up into individual stocks, let's just quickly glance the index now, because they sets overall the market mood. So one is Nifty futures. Open interest has jumped by massive 31.54% today compared to yesterday. So which is the underlying Nifty value trading around 24,349. That is a huge jump up in participation. Nearly one third more positions than yesterday. So this tells us traders are actively buying fresh positions around current Nifty levels. So which is actually happens either around expiry related activity, or when there is a small directional wave build up like in the market. And the bank nifty also like has jumped risen, so about 8.39%, which is the underlying trading near 58,037. Nifty saw an even sharper OI jump about 43%, and mid cap nifties rose about 7.2%. So when you see this kind of broad-based OI increase in the across indices, so and individual stocks together, it generally signals one thing: traders across the board are getting more active, more engaged, positioning themselves for a biggest move either this week or into the next expiry. It's the kind of environment where volatility can pick up like quickly. So if you are an option trader, just pay close attention for today. So let's just get into the meat of the segment, the top five individual talks where open interest has surged the most, and the actual news and reasoning driving the search. So the first talk is Hitachi Energy India. So sitting at number one on our list today, which is Hitachi Energy India, with sharp jump in OI is like yeah, that's the NSC symbol for the Hitachi Energy India, which is like Power India. So look at the number. Y has jumped massive 53.41%. So yeah, Hitachi India, it has raised open interest of 53.41% in just one day, from around 33,306 contracts yesterday to 51,095 contracts for today. So this is an enormous, almost like eye-popping increase in fresh positions in a single stock. So trading value is also like strong with over 1 lakh contracts changing hands, and total value is traded like combining futures and options crossed the 1.25 lakh crore rupees, which is actually let me just correct it, 1 lakh 25,087 lakhs. Yeah. So which is about 1,250 crore. That's serious money moving in this one counter now. So why you guys think everyone is like suddenly interested in Hitachi Energy India in a single day? So let's just talk about that also, because as I mentioned, the you guys are like aware that OI is jumped, but you don't know the reason why it has jumped. That's the one thing you should guys know about this particular stock before actually taking any financial decisions. So let's just talk about the company first. In simple words, this is basically India's leading power technology company, as we know, and it makes a transformer, switches, grid automation equipments, and all like heavy engineering stuffs that power out electricity grid and all. So, and here's the exciting part of this their story right now is India's electricity demand is exploding. Yeah, our peak power demand hit a record of 270.8 gigawatts recently. That's up a massive 68%, like from 148 gigawatts, like back in 2014. And going forward, this demand is projected nearly double, right? So it is around 458 gigawatts by the year of 2032. So this is a huge structural long-term growth story for any company that makes like power equipment. On top of that, Itachi India's like its management has said that they are specifically going after the data center boom. And I remember, with AI adoption exploding across the world, data centers need massive, reliable power and infrastructure. Correct. So the company is now targeting to capture as much as 30% of the total spending, like which is happening in India's data center power, in data center infrastructure, which is in India. So up from their earlier target of just like a 10 to 15%, that's a very bold and very bullish target. Yes. So the company has closed to the year with a record order of 29,600 crore. That is meaning they already have that much confirmed business lined up for the future, giving strong revenue visibility for the coming quarters. So their recent Q4 results were also excellent. Net profit jumped nearly 80% year on year, and sales grew over 47%. So now on the price action side, the stock like did see some profit booking recently, and slipping around 1.3 to 1.4% on July 2nd after touching levels like close to its all-time high earlier in this year, around 38,785. So this is exactly the kind of setup we are all like see the shove of build-up, because with the stock that has such a strong long-term growth story, but also trading at a very expensive valuation with a P ratio of 150. So traders on both sides, like the bulls getting on the data center and power demand story, and the bears worried about the stretch valuation are actively buying positions. The tug of war is exactly what's showing up in this massive 53% OI jump up now. Yeah, the next one is PB FinTech, which is also Policy Bazaar. Coming at the number two on our OI list is Policy Bazaar. That's it's a PB FinTech, the parent company of Policy Bazaar, Paisa Bazaar. So, open interest has raised up to 45.17 45.17% from around 25,913 contracts yesterday to 37,617 contracts for today. So total value traded in this counter across 92,000 lakhs. That's over 920 crore with a good mix of both futures and options actively. So let's just talk about why PB Fintech is suddenly buzzing with the fresh positions, right? There is actually two separate new triggers here. Both are genuinely significant. The first one is there is a large block deal in stock and entirely linked to Temsec called MacRitchie Investments sold a 2.6% stake in PB FinTech worth massive of 1,908 crores through a block deal on the exchange. So now, whenever a big institutional investor sells a chunky stake like this through a block deal, it naturally creates a lot of buzz. Some traders see it as a signal to be cautious, and since there is a large foreign investors like booking profits and also they are exiting. So while others see it as a buying opportunity if they believe the stock's long-term growth story remains like intact. And that is what like simply profit booking by an early investor rather than just any negative view on the company itself. And the second trigger is PB Fintech announced it will invest up to 20 crore in its wholly owned payment subsidiary called a PB Pay. And it is also setting up two new subsidiaries in the Dubai to strengthen its international insurance distribution and reinsurance business. This shows the company is actively expanding its footprint beyond the India and into the UAE also and the other Gulf markets, which is positive long-term signal for growth-focused investors. So for those, like for these two particular things together, a large block deal creating a short-term uncertainty plus positive expansion news for the medium term. And you get exactly what kind of makes the high conviction environment like we are trading on both sides. Also worth noting that brokerage have been fairly divided on this stock recently, some maintaining buy rating with price targets well above current levels, while others have taken more neutral stance. Like the kind of split of opinion among analysis is often like exactly what fuels like heavy two-sided options, like we are seeing currently. The third one is demand. We are hearing about the demand for past 3 days, as you guys are noticing. So that's the Avenue Supermarkets, the company behind the DMart and retail chain that almost every Indian household is familiar with DMart. So open interest rate has jumped to 42.97 from 36,300 contracts yesterday to 51,898 contracts today with a very healthy total value trade of 91,000 lakhs. That's around 911 crore. So here's the actually big trigger for DMart today is the company released its Q1 F9 27 business update, meaning its provisional numbers for the April to June quarter of this year. Revenue came in at 18,343.5 crore. Now, on the surface, that's a solid number showing continued growth in their retail business. And the company has now operates 503 stores across whole India as of the June 30, 2026, according to the last month data, end of the last month's data. It had 503 stores across all the whole India. But here's the interesting part that despite this business updates, the stock actually fell sharply, like dropping around 3.27% in the last session. So why would the stock fall on what looks like decent like revenue growth? It has a good and decent revenue. Why it fell by 3.27? So it usually happens for one of few reasons. One is sometimes it's about the pace of the growth. If the market was expecting even stronger same store sales growth or a faster new store like additions. So as the actual numbers came in just good but not great, then it can trigger disappointment and selling, especially in the stock like DMart that rates a very rich valuation. Remember, its price to earning ratio has like historically been above 80 to 90 times, like earning. At such expensive valuations, even a slight massive and a great expectations like can trigger a sharp reaction. So there has been a broader analysis commentary and also around the general Mercedes and apparel category recovery. So margin dynamics in the retail sector, which investors are watching closely this quarter. So what we are seeing here is a classic pattern, a stock that dropped sharply on results related to news, while open interest like they just surged. This kind of combination, falling price, rising OI, as I explained earlier in this video, that typically signals short build up means like traders are actively placing fresh puts on the stock could never like see more downside in the near term at the least until the market fully digests this number. Of course, this can reverse quickly too, right? So, if the border consumption and the retail growth story reasserts itself, so this one to watch very clearly and closely for today. Yeah, the fourth one is CG Power. So it's actually absolutely stellar run this year, as we know. So open interest rate is jumped 35.37%. It was 32,929 yesterday, and it now 44,577 new contracts are added, with the total value traded across 1 lakh 34,000 lakhs, which is roughly 1,345 crore. Generally, one of the highest value counters on the entire list today. So now, why is CG power such a hot topic right now? Multiple big positive triggers here. So, what you guys think CG power has some hot news right now in the market? The first and most importantly, CG power hit a fresh all-time high of 3981.15 on July 2nd. So an all-time high. Yes, the all-time high. The stock has railed close to 45 to 48% in 2026. Only in 2026, an extraordinary run. The second one is there was major sector level good news also. The government's ISM like 2.0 scheme, that's India's semiconductor mission 2.0, as we know, received finance ministry approved worth massive 1.25 lakh crore. So aimed at boosting domestic semiconductor manufacturing, chip design, and also reducing India's dependence on imported chip. CG Power, along with the other names like Keynes Technology and Most Chip, so rallied sharply on this news because CG Power has its own semiconductor manufacturing, like as part of the diversification of this strategy. And the third one is global brokerage, Nomura. Like it has been extremely bullish on this stock. So this recently raised their price target to 1,100. Either CG Power's strong positioning to capture export opportunities, like which is in the US and European markets, especially in transformers and switchgear. Like at the time when Western markets are facing several supply constraints and year-long delivery leads. So Nomura specifically highlighted that CG Power is expanding its transformer manufacturing its capacity by 1.7 times to the 110 GVA. So with a meaningful chunk, especially for the exports, they are projecting a 33% compound annual growth between FY 26 to FY 29. That's extremely aggressive bullish growth forecast. And the last one is Marico Limited. So FMCG gains now for brands like Parachutes, Saffola, Setwet, Livon, and many more household names. So open interest rate has jumped to 35.29%. It was 21,591 yesterday, and today 29,210 contracts with the total value traded around 72,758 lakhs, which is nearly 728 crores. So what's driving here to the Marico today is again the combination of factors. The first one is just like CG Power, as I mentioned, Marico also touched a fresh all-time high recently, which is hitting 858.75 on the July 2nd, which was yesterday. So this stock has been on the really strong technical run, trading comfortably among all key moving averages. So the 5 day, 20 day, 50 day, 100 day, and also even the 200-day averages, which is like a sign of very healthy, broad-based upward movement. Over just the last 3 months, the stock has returned over 11%, which is more than double in the Sensex return in the same period. And the second reason is this is the biggest trigger for the today's specifically, which I should mention. Marico put out a statement saying it expects only modest growth in operating profit, like on the year-on-year basis for the first quarter of this fiscal year. Now, this is essentially a pre-quarter guidance, like which is an update, and ahead of this formal results like announcement, and this is the market whenever a company gives out a kind of forward guidance, especially languages like more modest growth, so traders react immediately. Some of see this as a mild note for cautious and start hedging or building short positions, while others see it as an opportunity, especially if they believe the modest language is simply conservative management commentary and the actual results will beat their expectations. However, this is worth flagging for balance. The stock is trading at a fairly stretched valuation with the price to earning ratio another 55 to 60 times, and PEG ratio analysis for buy tracker suggests for earnings. So if you have just got a stock at an all-time high with a rich valuations right behind of like quarterly results, when management itself has a flagged only modest profit growth. So this is exactly the kind of setup that creates heavy two-way positioning in this options market, which is actually showing up today as a sharp 35% OI jump. So let's just quickly take a recap of whatever we discussed, whatever we have covered. It's a crystal clear in your mind that number one is Power India, which is Hitachi Energy India. OI has jumped 53.41%. The reason is massive structured power demand and data center growth story and record order blockage, but some recent profit booking after the some strong run too. So creating some genuine tower for between the bulls and bears now. And the number two is Policy Bazaar, PB FinTech, Y up to 45.17%. Reason is simple, the large 1,908 crore block deal by attempts at linked investor selling stake. And the third one is DMart, Avenue Supermarts, OI jump of 42.97%. Reason is the same, Q1 FY27 business update, showing revenue growth, but the stocks actually fell sharply, suggesting the market wanted stronger numbers, leading the fresh short positioning. And the fourth one is CG Power with the OI build-up of 35.37%. And the last one is Marico with the oil build-up of 35.29%. The reason is fresh all-time high on the strong technical momentum, as I mentioned, plus a cautious modest profit growth guidance statement ahead of like Q1 results, creating active two-sided positions for now. So I'll just quickly tell you this also. Whenever you see a stock with a big jump in OI interest, always ask yourself two questions. One is the price growing up or down alongside, like this OI rise? And second one is there a specific news trigger or like results, big deal or analyst upgrade or a policy announcement that explains why fresh money is entering? So if you can like answer both of these questions, or you will have a much clear, like much more confident view on what's really happening in the stocks instead of just blindly following the numbers, why numbers. So we have covered what AI, OI actually means, how the real it alongside price movement, and gave you the top five stocks in the sharp OI build up today, along with the real news and reasons behind each one. So as I always say, please remember open interest data and F&O analysis is always useful for understanding market positioning, but futures and options trading carries very high risk. So it is not suitable for everyone. Nothing in this video is like buy or sell recommendations. Please do your own research, understand your risk appetite, and consult a registered financial advisor before actually taking any trading decisions, especially in your derivatives. So yeah, so if this information helps you, just let me know in the comment section. And also if you have taken any trade, or if you are holding any positions, or if you have taken any trade in the stocks which I mentioned. As I mentioned, I have given you five stocks which has a good OI build up. So if you have taken any trade in those stocks, let me know in the comment section. We'll analyze that in together. So we'll be back with the stocks and the sectors which are outperforming and which are underperforming, sectorial wise. We'll be discussing about the heat maps. So be with us. We'll be back in 10 minutes. Yeah. In that meanwhile, you just go through the links which I mentioned in the chat box. It's also I have mentioned a link in the description. Just go through the link. Just contact us anytime. We'll give you the proper demo. We'll give you the proper demo and briefing about the tool we are using, and also we'll give you yeah, we'll give you briefing about the tool we are using and the indicators. So yeah, just I will be back in 10 minutes. Just be in the session for some time. So as I was telling, I'll be telling about the hello. Yeah, I'll be telling about the heat map, which are all the sectors are outperforming and which are all sectors are like underperforming. So yeah, it's so the first one who's outperforming is Nifty IT with 2.42% of gain. The clear actually top today. This is easily the star performer of the day, and it's actually continuing story we already touched on earlier. That IT had a rough 2026 overall, and the index has fallen over 30% from its highs. So this rally is because bottom fishing, meaning the smart investors are like saying, okay, please just price have fallen enough, valuations have been like become cheap. Let's start buying again. So this is all the thought we are the investors are getting. So add to that, US Fed Chair Kevin Walsh is also like comments about something softening inflation expectations, reduced fear of harsh interest on rate actions, which is actually good news for Indian IT companies who earns a big chunk of revenue from the US. And also at Infosys recent AGM, like Nandan Nilekhani gave a bullish speech saying AI won't kill it, IT services. It will actually expand the opportunity. He is targeting a massive $400 billion AI-led services opportunity by 2030. This kind of conflict talk from a big name really like relief sentiment actors across the whole sector. So here the top three stocks are: one is Infosys, a clear leader of this rally. Second one is HCL, rising and tandem with Infosys, benefit from the some same buying and improved global tech sentiment. Third is Tech Mahindra, also participating strongly in this board-raised IT bonds. Second sector which is outperforming is second one is Nifty Healthcare, which is 1.96% of gain. This is I think you guys need to remember this because this is slightly different from pharma because this index include hospital chains and diagnosis companies when not just drug makers. This sector is rising because of what we call defensive rotation, and when traders get a little nervous or uncertain about the broader economy, this spark money is like sectors like healthcare because a lot of बीमार पड़ते ही रहेंगे चाहे economy अच्छा हो या खराब, like people will always need hospitals and healthcare, right? So recession or no recession, this is why it's called a defensive sector, which is Nifty Healthcare. Here you can mention Apollo Hospitals, Max Healthcare, and Fortis Healthcare. These three stocks are which are outperforming in the Nifty Healthcare of 1.96% of gain. And third one is Nifty Pharma. Pharma is basically healthcare's cousin sector. Same defensive logic applies here also. So, but this one is specifically about the drug makers and the exporters. And there is one more. Yeah, I was mentioning the one more big reason pharma is doing well right now, which is that rupee has been weak lately and hovering close to 95 to the dollar. And now pharma companies like Dr. Reddy, Cipla, and Sun Pharma earn a huge chunk of their revenue from exports, like especially to the US. When the rupee weakens, their dollars earning convert into more rupees back home and so a weak rupee is actually good news for their profits. That's a direct, simple connection. I think you guys worth remembering. Here, the third three stocks are one is which I mentioned: Dr. Reddy and Laboratories, Cipla, and Sun Pharma. And sector which are underperforming are one is Nifty PSU Bank with the minus 1.41%. So today's biggest loser it is. This one has a very specific and very fresh trigger. Bank of Baroda shares fell nearly 4% today after the bank agreed to massive $600 million settlement. Like that's around 5,700 crore in the long-running NMC health legal case. So now, when one of the biggest names in the sector like takes such big hit, it drags the whole sector index down with it. So if the other banks in the basket had no bad news in their own, this is a classic example like one heavyweight stock like spoiling the other mood of entire whole market, whole sector. Here, one is Bank of Baroda, today's main culprit, was down sharply on the NMC health settlement news. Second one is Punjab National Bank, dragged down along with the broader PSU Bank, even without its own specific bad news. The third one is State Bank of India, India's largest PSU bank, even SBI, like, which has otherwise been the strongest performer in this space recently ahead of this Q1 results, is feeling some of today's sector-wide pressure. And the second sector which is underperforming is Nifty Bank with minus 0.11%, mild but still red. So Bank Nifty is a mix of both private and PSU bank. Like, so it's basically getting pulled down from two sides today. One is the PSU bank weakness we just discussed, it dragging its lowest. And the second one is there has been a some mild weakness in the selected private banking names too, like with profit booking happening in the recent good run. It's not big fall; it's just a bit quite of consolidation after banking stocks had rallied nicely to past few sessions. Here, Axis Bank, HDFC Bank, and ICNC Bank. Axis Bank is one of the private names seeing mild weakness today, capping against the overall bank nifty. HDFC is its heaviest weight stock in the whole bank nifty, trading largely flat today, not just adding much support. And ICICI Bank also like fairly muted today, contributing to the overall subdued mood in the banking basket for now. And the third one who's underperforming is Nifty Auto by 0.06% of fall. Honestly, this one is more resting than falling. Auto stocks had a really strong run in the previous session. We are discussing about the Nifty Auto from past 1.5 weeks, uh, rallying nicely along with the IT and realty. Like, so today's TDDP is just some natural profit booking. Traders who bought in earlier are like locking in some small gains after the recent up move. Nothing alarming here, just the sector catching some its breath. Here, Maruti Suzuki, India's largest car maker, a bellwether for the whole sector's move, and the Tata Motors. Watch this one actually closely since it has some exposure to the global markets through JLR adding its extra volatility. And Mahindra and Mahindra, it's a strong recent performer. So now seeing some mild cooling off after its good run. So it's the simple story of today's heat map in one line that money moved out of PSU banks, which had one bad company, specific stocks like moved into IT and pharma healthcare sectors that were either beaten down and cheap, like IT, or seen as safe. So as I always mention, this is for the education understanding sector rotation and not just buy sell tip. Please do your own research. Just if you are giving any call, if you are just letting you know the positions, just analyze and keep your eye on that. Watch it closely, just to check our accuracy. That's it for the open interest and the heat map for the today. I have mentioned the top three sectors and the stocks under those sectors who are outperforming and who are underperforming. Also, I have mentioned the top stocks of the day according to their open interest jump. That's it. Yeah, that's we'll be back with the new updates. If we get the new updates and the new news in the market, we'll be updating. And if we have a new call and movement, we'll be updating here. Just let me know in the comments about your trade, about your interpretation. So just let me know in the comment section. We can have a brief talk about it. Yeah, we'll be back with the updated news. Thank you.
So, hi everyone. We'll just talk about the commodity market. So, we'll bring you the most comprehensive and immediate breakdown of what is proving to be highly volatile and completely fascinating trading session across both domestic and international markets. So, if we look at the broader macro pulse that is dictating the flow of institutional money this afternoon, the absolute undisputed stars of the trading day are the precious metal, so which have got a massive fundamental tailwind following the release of significantly weaker than expected United States job data that has completely reshaped the narrative around the Federal Reserve's next move. So we are seeing a situation where the latest payroll data revealed the U.S. economy added near 57,000 jobs in June, which is lowest figure we have seen in 4 months, sharply, and below the consensus market estimate of 110,000, while the unemployment rate has simultaneously ticked up to 4.2%. This critical piece of economic data has acted as a primary catalyst for dollar softening, effectively forcing investors to drastically scale back their expectation of Federal Reserve rate hikes, with Fed funds futures indicating that the probability of September rate hike has plummeted to around 50 to 54% from previous high of nearly 60%, 67% just a few days ago. So we'll just look at the technical chart. So we can see the market here. The market is purely uptrend. So it's currently trading near a strong supply zone. But since the market is uptrend, the supply zone would act as a correction for the market to still expand further. So you can enter on this break, resistance level break, or wait for the candle to close above the supply level. So if you look at the 15 minutes time frame, you still get the strong picture. So you can wait for the price to react in this resistance level, and then you can look for the continuation in 15 minutes. So because of this profound shift in the interest rate outlook and subsequent weakness in the dollar index, we are witnessing an extraordinary rally in gold and silver this week, with the MCX gold price aggressively racing towards 1.48 lakh rupee mark per 10 grams, while spot gold in international market has surged by nearly 1.5% to trade above the 4,108.50 per ounce level. So putting the psychological barrier of $4,200 squarely in this process. So for those who of you actively managing positions in silver, momentum is even more pronounced as silver has historically acted as gold's higher beta cousin during risk on precious metal rallies, surging by over 2% to trade above $62 per ounce internationally, so which translates to massive rally on MCX where silver has decisively breached the 2.38 rupee mark. So this incredible outperformance in silver is perhaps the most positive signal in the entire commodity market complex today. So as it clearly signals a robust risk on positioning among precious metal traders who are factoring not only the safe haven demand generated by the cooling US labor market, but also the underlying industrial demand that silver inherently benefits from. So when we look at the option data and technical levels for MCA gold August futures, which had closed yesterday, cautiously bullish at 1,44,275 rupees. So we can see uh, the sustained momentum buying has absolutely shattered near-term resistance level, making 1,45,000 rupee mark the new psychological milestone and primary target for extended bull case. So provided that the US dollar index manages to stay suppressed below the 104 level heading into the close of the session. So these acts as a very strong level we can see. So software has detected a buy signal at 2nd July 6:25 p.m. and we had gained over 1.37%, which is around 1,998 points, close to 2,000 points. So continuing, now as we pivot our attention from the staggering highs of the precious metal market and look towards the energy sector, the narrative shifts demand dramatically to a landscape defined by geopolitical caution and macroeconomic supply and demand rebalancing. So, particularly in the crude oil market, where prices are currently navigating a complex web of international diplomacy and production quotas, crude oil prices are broadly exhibiting a sideways to cautiously bearish to neutral trend today. So, with US WTI crude dropping below $69 per barrel, while Brent crude continues to hold relatively flat near the $72 per barrel mark, primarily because market is continuously unwinding the massive war premiums that were previously baked into prices during the height of the US and Israeli conflict with Iran earlier this year. So the absolute driving force keeping a definitive lid on crude oil prices this afternoon is reported positive progress in the ongoing Doha talks. So if we switch to crude oil, so as we can see here, just show the structure. So we are currently in a downtrend. So if we look at any retracement levels, so for a proper uptrend, you need the price to close above 6,800. But we all can consider this as a minor structure shift, not a major one. So we can see buy signal given by an indicator, and what you can do is since there is a small minor structure shift, you can cut buy once it closes above this level. So that still the trend is downtrend, which is very strong. So if you see a break below this level, then go for short. So crude oil prices are broadly exhibiting a sideways to cautious bearish neutral trend today. So with US WTI crude dropping below $69 per barrel, while Brent crude continues to hold relatively flat near the $72 per barrel mark. So primarily because the market is continuously unwinding the massive war premiums that were previously baked into prices during the height of US and Israeli conflict with Iran earlier this year. So the absolute driving force keeping a definitive lid on crude oil prices this afternoon, which is reported positive progress in ongoing Doha talks, which has fostered a growing confidence among energy trades that diplomatic efforts will ultimately succeed in preventing any further major disruption to global energy supplies in the Middle East. So, however, while the upside is heavily capped by these peace efforts, we should also remember that prices are not completely collapsing because they are being structurally supported by a strong floor created by organization of petroleum exporting countries and its allies, known as OPEC Plus, whose ongoing production cuts are slated to remain in effect through the third quarter of 2026. So the OPEC Plus floor means that Brent crude is highly unlikely to fall below the 68 to $70 range in the near term, establishing a tight range-bound trading environment for MCX crude oil July futures, which closed yesterday at 6,474 rupees per barrel and are currently testing critical support levels around 60,430 rupees. So if you are looking at the technical analysis for WTI crude oil, it is currently in the midst of a sharp pullback towards a descending trend line and is actively testing a cluster of Fibonacci resistance level, having tumbled from the $71.59 area down to low around $67.14 before attempting to claw back some of those losses and test the 50% retracement level at $69.36. So, since as I told, there is a minor structure shift, don't consider this minor structure shift as the entire trend change. This is just a correction as the whole trend is in downtrend. And since there is a positive talk going on in Doha, there is a high chances of oil prices stabilizing. So you can look for a close below this level. So if we had we had drawn structure thing. So that's called the list. So since you have like this, there is two possibilities. So if the oil price has to turn the structure bullish, it has to break this level. It has to go like this, or else, or if you see a continuation, it must break this level. So if it goes like this, then you might see a retest over here, and again you might see a retest over here again and again. Like it could be a sideways market or correction like this. So since we know that the 1 hour time frame supports downtrend, so if we look at the 15 minutes time frame, we can see that right, this is the structure. So wait for another high to form. You can wait for the high not to break this high. You can wait for the high to be formed here and give us the proper structure and look at the retest level, or you can take execute your short positions after this break of the support level, and you can place it sell above this. Then you can target for this support level like that. So this would be the analysis for crude oil. So for those of you trying to find actionable trade setups with this heavily caped energy market, the highest conviction trades are actually emerging in the equity market through profound equity commodity divergence, specifically in the refiner space, where companies like Hindustan Petroleum Corporation Limited or HPCL are surging and trading near 399 rupees, benefiting immensely from the refiner margin improvement narrative. that inherently accompanies falling or stagnant or crude oil prices. So the divergence is not isolated to energy sector either, as we are seeing similar underlying positive equity thesis in the industrial metal sector, where despite a mild weak performance in MCX base metals like copper and zinc earlier this week, equities like Hindustan Zinc and broader Nifty Metal Index have shown significant positive momentum, signaling that the institutional investors are actively pre-positioning for a broader economic recovery. So, while we are discussing commodities to potentially avoid today, it is imperative to highlight natural gas, which has suffered three consecutive sessions of aggressive declines, and it is currently facing severe structural bearish headwinds driven by completely adequate US storage levels, combined with the onset of the Indian monsoon season, making it highly unfavorable asset for long positions in the current macroeconomic climate. So as we move deeper into the final hours of this Friday session, the single most critical variable to monitor remains the dollar's reaction to the broader economic data and any sudden unexpected breaking headlines out of the Doha negotiation, because a definitive breakdown in those talks represent the ultimate tail risk scenario that would immediately spike Brent above $75, trigger a massive short covering rally in MCX crude above 60,700 rupees. So as I showed you in the chart, so any if the Doha talks doesn't support the positive decisions, then crude price might jump and break the structure of 6,630 and give us a new high, which can totally change the structure of the market. So So please remember that navigating these highly volatile waters require immense discipline, because as recent data has shown, 9 out of 10 individual traders in the equity future and option segment incur net losses averaging close to 50,000 rupees, compounded by an additional 28% in the transaction cost, which underscores exactly why you must maintain strict stop losses, manage your leverage approximately, and never trade based on emotion during this massive fundamental shift. So this would be the update on all the commodities. So hope this information helps you in taking trading decisions. So please remember that all content provided on the stream is for education and information purpose only, and it does not constitute financial investment or trading advice. The stock market involves significant risk, and you can lose more than your initial investment. So always conduct your own independent research and consult with a qualified financial advisor before making any investment decision.
So yeah, guys. Actually, we'll be asking or we'll be discussing the question and answers, which comes in most of the viewers and most of the traders' mind. So we'll be discussing the usual and most common questions here. The first question is, what is the primary reason for the weakness in the US dollar today? I'll be asking questions to Harish. So he'll be answering the questions and clearing the doubts which we all have and which most of the viewers have. It is what is the primary reason for the weakness of the US dollar today?
So the US dollar is softening because recent labor data revealed that the US economy added only 57,000 jobs in June. So a figure significantly below market expectation, which has shifted investor sentiment regarding future Federal Reserve rate hikes. So this is one of the primary reasons for the weakness in the US dollar today.
Yeah, that seems actually relatable and correct. So the next question, I will go to the next question is, what are the current trading levels for M6 gold in commodity, like in August futures, gold August futures? What are the current trading levels?
So MCX Gold August futures are aggressively rallying towards the 1.48 lakh rupee mark per 10 grams, driven by increased safe haven demands. So if we look at the MCX Gold futures, so we can see that in recent times the gold has given us a strong bullish structure. So we have a strong resistance level at 1,48,000, which is considered as a psychological level. So once you see a break above this level, the next level would be 1,50,000, and the next level would be, next resistance level would be 1,53,000 now, 400, and support would be at 1,44,678, and next support would be 1,41,328. So these are the current trading levels for MCX gold futures.
Yeah, that was the answer. So yeah, that was the answer for M6 gold August futures current trading levels. So the next question is, how does the performance of silver, like which is when we compare it to gold in the current market, like if we compare the silver to the gold, how does the silver perform?
So silver is outperforming gold, surging by over 2% internationally and breaching the 2.38 lakh rupee mark on the MCX, acting as a higher beta asset that reflects strong risk on positioning. So compared to gold, silver is outperforming. So basically, we all know that silver is high beta asset. So silver always perform. It outperforms gold as always we know. So when gold is in uptrend, the silver also stays in uptrend. Both are correlated assets. So this way, silver is currently performing better than gold.
Better answer for the question. So yeah, I just want to ask about the crude also, since we are talking about the commodity. Why does the crude oil market currently range bound? Why is the crude oil market currently range bound?
So crude oil is range bound because its upside is capped by progress in the Doha talks, while its downside is structurally supported by OPEC production cuts through the third quarter of 2026. So that's the reason crude oil market is currently in a range bound.
So what do you think? I'll talk about the technical supports about the crude oil now. So what is yeah? So what?
The next question, before moving on to the next question, if you have any questions to ask personally, just put it in the comments. We'll answer. since there is no comment in the comment section, we'll be moving on to the next question that Sushma will ask now.
So yeah, I was talking about the crude oil. I was asking about the crude oil, and I'll also ask technical support level for NC's crude oils, like in July futures. So what you say, Harish, like what is the technical support level for NC's crude oil in July futures?
So we'll just shift the chart to crude oil. For intraday, we have a strong resistance at 6,581, and the next resistance is at 6,628. The recent support level that the price has regained is 6,553, and the next support would be at 6,500. And the last support, which is a strong support zone, is at 6,458. So these are the levels for intraday, and when we look for proper swing trades, we can consider support at 6,477, and we have a strong support at 6,279. Also, we have a support level at resistance level at 7,134, and the immediate resistance is at 6,807. So these are the strong technical support levels for MCX crude oil futures. So the price is currently trading at 6,561.
So yeah, technical support for M6 crude is also done. So I just wanted to ask about HPCL, refiner stocks like this HPCL, like showing some positive momentum despite this crude prices. So uh, why you think it's there is a movement in this particular stocks like refiner stocks like this HPCL? Why it's showing a positive momentum even though there is a crude prices are like this?
So, natural gas is facing structural bearish headwinds, including adequate US storage levels and the onset of the Indian monsoon season, which is leading to consecutive season of decline. So, this is the reason why the specific headwinds is natural gas is facing. So, when she asked about HPCL, these stocks are benefiting from refiner margin improvement narrative that typically accompanies falling or stagnant raw crude oil prices, illustrating a clear equity commodity divergence. So, this is the reason HPCL is showing positive momentum despite stagnant crude prices.
So we'll move to the next question then. So what do you think like what specific advance like natural gases facing or yeah facing now right now like what exactly the specific advance which natural gas is like facing?
So yeah, as I previously said, natural gas is facing structural bearish headwinds, including adequate US storage levels and the onset of the Indian monsoon season, that is leading to consecutive sessions of decline. So yeah, this is the reason for natural gas facing specific headwinds. So yeah, before moving on to the next question, let me know if you have any personal questions to ask. Just put it in the comments. We'll just try to answer your questions as well.
So yeah, I'll move to the next commodity, which is yeah, again the natural gas. So what the structural factors are like driving the bearish trend in natural gas? Gas.
So natural gas is suffering from structural bearish headwinds that have led to three consecutive sessions of declines. So these factors include a combination of well-supplied US inventories and the seasonal onset of Indian monsoon, which generally reduces the immediate demand outlook. So these are the structural factors that are driving the bearish trend in natural gas.
Okay. Then I'll go to the next question then. So then, what is the potential tail risk for the energy markets then?
So the primary tail risk is a sudden definitive breakdown in the ongoing Doha diplomatic negotiation. So if these talks were to fail, the market would likely react with an immediate price spike in Brent crude, potentially driving it above $78 per barrel and triggering widespread short covering across energy futures. So these are the potential tail risks for energy markets.
Okay. So, how has market sentiment like shifted regarding the September Federal Reserve rate hike? How it has shifted?
So the market sentiment has changed drastically following the weak June payroll data. So the probability of a Federal Reserve rate hike in September has plummeted to approximately 50% to 54%, down from pre-data level of nearly 67% just a few days ago. So this is how the market sentiment has shifted regarding a September Federal Reserve rate hike.
Okay. Then what does data suggest regarding the financial risk for individual traders?
So the data indicates that participating in equity futures and option is extremely high risk for retail investors. Specifically, 9 out of 10 individual traders in this segment face net losses averaging nearly 50,000 rupees, a figure that does not even include the additional 28% incurred in transactional cost, highlighting the critical need for robust risk management. So retail traders, they enter blindly without any financial education and risk management, which is the most important thing to be included in trading. So this is a critical need for robust risk management. So this what the data suggests treating the financial risk of individual traders.
So yeah, Harish, I just wanted to ask one more question. Which is like, why does the market go up when the economic news seems like bad?
So this is the classic bad news is good news paradox. When we when we saw that the U.S. economy added fewer jobs than expected, which was 57,000. 1,10,000 was estimate, but 57,000 was jobs that were added. So the market search, it feels counterintuitive, but for a trader, the bad data signals that the Federal Reserve might stop raising interest rate to avoid hurting the economic further. So less pressure from the Fed usually makes investors feel more confident about buying stocks in gold. Okay, since you were asking me questions, now I'll ask you few questions. Can you tell why does silver sometimes move faster than gold?
Yeah, that's a good question. So think of gold as a like a steady anchor, okay, and the silver as its more excitable cousin. So silver is what we call a higher beta asset, and it reacts more volatilely to the same news that moves gold. When gold releases due to a weaker dollar, silver tends to amplify that more because gold it is also used in the industry, giving it a double boost of demand.
Okay, that was a good answer. So moving on to the next question. Yeah. So moving on to the next question, I'll ask you if oil prices are flat, why are refinery stocks like HBCL going up?
Yeah, the same question we already discussed, but it's quite kind of different and quite different. This is where the divergence confuse people actually. So investors are looking at the margin, not just like a headlines price of oil, right? So when the price of the raw crude oil stays flat or drop, it gets cheaper for refiners to buy their ingredients. Meaning they can keep one more like more profit when they sell the finished fuel. So the stock market is betting these companies will both like more profitable even if the world isn't just paying more for the oil.
So moving to the before moving to the next question, let me know if you have any questions related to any of the asset or any of the commodities.
So let me ask you one more normal and all regular trader question. So this question will be in the most like regular traders mind. So I'll ask that. I'll go for it. Why does a trader like often feel a sense of relief when a struggling position hits a stop loss?
Yeah,
It's
that's
actually,
a
no, I think I just want to mention it's actually a kind of active question and it's actually usual question. Every trader will get this in his mind whenever they're struggling with the position. So, what do you think?
so when a trader goes against you, you exist in a state of cognitive dissonance. So
Yeah.
you're holding on to hope despite contradictory market data. The stop loss function as an external authority that uh, so it's because the mental energy spent monitoring a wrong position has been freed. You are no longer forced to defend losing cases, so which allows your brain to stop the exhausting process of rationalizing a failing trade. So this is when a trader often feels a sense of relief in a struggling position. It's a stop loss. This usually happens in a sideway market when you think when you look for a direction and the price doesn't move in that way. It keeps on collecting liquidity on both the sides and finally breaks in the direction that you wanted. So this is when the trader often gives a sense of relief and it often struggles position hitting a stop loss.
Yeah, so there is another question. Actually, that's actually I just wanted to ask about the certainty, which is if a market moves market move like seems obvious to retail participants, why does the market frequently move in the opposite direction?
So market are discounting mechanisms. By the time our setup looks obvious, meaning there is a clear news, a perfect chart pattern and a widespread agreement, the smart money, which we call institutional players, has already taken their position and is often looking for liquidity to exit. So if everyone is already long because the move look obvious, there is no one left to buy. So which leaves the market vulnerable to a sharp reversal or a stop run as the big players sell into the retail burn. So this is the reason the market frequently move in the opposite direction. So now I'll ask you a question since you asked me. How do you mathematically distinguish between trading edge and simple wavelengths?
Yeah, that's a good question. So you see the law of large numbers. So yeah, I just wanted to tell that you use the law of large numbers, like or a small sample size, like example 12, 10 to 12 trades. Luck is the dominant factor because market noise is higher than your edge, right? So to distinguish skill, you need a like a yeah, you need a actually a high sharp ratio, risk adjusted run. So maintained over a long duration, which is like 3 to 5 years. If your success rate is like nearly 60% over 1,000 trades, that is likely skill. If your success rate is like 80% over 10 trade, that is almost a certainty variance. So true skill is the only ability to maintain consistent risk adjusted returns, regardless of whatever the market is bullish or bearish.
So yeah, that was a good answer.
So yeah, I just wanted to ask you one more question, which is why does the performance gap between traders widen when everyone has the same data?
Because trading is not an information processing game, it is an execution and discipline game. So everyone has the same Bloomberg terminal or charting software, but only the top 1% have the psychological edge. The ability to ignore 99% of the noise, wait for the specific setup, and execute without hesitation. So the gap widens because the winners treat trading as a business with strict rules, while the losers treat it as an interactive game where doing more feels like working hard.
Acha,
So that's the performance gap between traders widen even when everyone has the same data.
acha. Considerable, considerable.
Since you understood the answer for the last question, now I'll be asking you another question. If a strategy work over 20 years but has a 40% chance of clearing your account in 6 months, is it a good strategy?
Mm, mathematically. So it may be a positive expectancy, which is like positive expectancy strategy. But practically, if you go practically, it is a fatal one. Like in trading, survival is a prerequisite for long-term success. Like if you risk management, like position sizing and all, if your risk management allow for a sequence of losses that could wipe your out from before you whole reach that long-term success, that strategy is like flawed. Good strategy is defined by its drawdown profile, how much pain it inflicts while waiting for the profits to materialize. So if you aren't around to participate in the long term, the statistics I think doesn't matter here.
So yeah, that was a good answer, and we have answered. So we have answered most of the questions. that we received from many of the traders to answer them in live. So we have answered most of the questions, and I hope that these answers were useful. So to know answers for more questions, you can put your questions in the comment when we come live tomorrow. So it's already 3:30 now. So thanks for attending our live session. I hope these information that we gave in our live sessions will be useful for your trading setups. So do share, do like, share, and subscribe our YouTube channel. Hit the bell icon for daily notification. So yeah, thank you for joining us. I will be
Yeah,
continuing it tomorrow.
tomorrow at 9:15. You guys can join tomorrow's session by 9:15. We'll be coming live every day. We'll be giving you live updates, and also we'll tell you our analysis. You just check our analysis first, and you can contact us anytime. The link is in the description. You can join and contact us anytime, and you can get us a demo. Get yourself a demo from us. Yeah, thank you so much for attending our session. Have a good day.